All right, guys, what is going on? What is good? What is good? Hope you guys had a good day so far, or at least have been able to learn something today. Maybe, maybe not. I don't know. We'll see. We shall see, everybody. Starting just a couple minutes early today, which is cool. So we'll give it a minute for some more people to hop on to the live stream. But yeah, Naruto, that alert did go off. I wonder what that could have been. I don't know. I do not know. Nah, I really wanted to save this for later, but I guess since that is the most recent thing, all it was 66.70, 75. That was equal highs from 10 o'clock, right around 10 o'clock, basically. So we traded lower at 1040 here, taking out Monday's PM session low, right? We traded higher, left a bunch of highs, and then we came down. To me, this was really like a first stage accumulation, but that wick right there on this 5-minute time frame, that is what gave us a intermediate term low, right? And then we got an intermediate term low, and then 1150 starts, right? So I know a lot of people still don't get this, or they refuse to get it, but you know, 1050, that's your 12 o'clock macro, and that just so happens to be the same time that we run those highs. And then at 12 o'clock, new hour, which is still inside the macro, we run the equal highs. The shit is ran by an algorithm. I keep trying to tell you, and you keep ignoring me. But yet it's hitting price levels, right, inside the same time windows over and over and over again, just like yesterday, right? That'll actually be the first thing. So yesterday, we swapped over to ESZ, by the way. So what we really should do is go look at ESU, and where did my... Okay. My mouse has gone away. That's crazy. Yes, there is a playlist for beginners. Yesterday on the session, we talked about the sell side liquidity, right? And I know this is a screenshot, so it's kind of hard to see, but we talked about those lows, and we didn't get that on the session. I told you, I was like, that was crazy, and I'm actually a little bit surprised we didn't do that. So we ended up coming a little bit higher, right? Basically back to the retail flag, and then we saw the extension to the sell side liquidity. I also very briefly did mention those equal highs, right? And I know for a fact we went over this quite extensively yesterday. I told you that the market does two things. It trades to liquidity and inefficiency. So the sell side liquidity I told you about, fucking nailed, and those equal highs, fucking nailed, right? Like I nailed David's mom last night too. Liquidity to liquidity. Look at that. That's what the markets do. Now, to be fair, it is hard to see inefficiencies on a bar chart. I think we can agree with that. Mason, I think we can agree. But what was the low of the session? Out of all the PM session yesterday, right? What was the low? The sell side liquidity, and what was the high? the buy side liquidity, right? You act like you know everything. I don't know everything, dog. I don't know everything. I didn't even see that message yesterday, but somebody told me that he had said that. He was like, oh, you act like you know what every candlestick's going to do. I don't. But I pointed out the sell side, we got it. And I told you about those eagle highs, and we got that too. So, pardon me for knowing what the fuck is going on. I'm trying to learn you something. But hey, you want to waste time and energy, be my fucking guest. You know what I mean? So, MOC yesterday, right? Took us lower initially. Another minute into it, took out like some very recent lows. Then we saw the run, right? That's algorithmic. Supply and demand has nothing to do with this shit. Nothing. Nothing. I don't know. Apparently, it's hard to keep up with so many alt accounts and so many fake profiles and SpongeBob's and emoji profile picture people. I don't know all their names, and I really don't care. But the point is, people try to come here to troll, or other places on the internet to troll, right? But why do you do that? You don't show your real face because you're a little bitch. You're scared. You're a pussy, basically. Sorry, ladies, but that's how it is. If you're a man and you hide behind a profile picture, you're a bitch. I'm sorry. That's how it is. So you do that because you're insecure. You're unsuccessful. You're probably extremely overweight. You know what I mean? And you're a failure at life. I get that. Well, I don't get that to that extent, but like, I get it. You know what I mean? I was unsuccessful a long time ago, and I hated it. I know what that feels like. It ain't fun. But I don't hide. I don't hide. So, anyway, yes. The markets trade, maybe I should restart my computer. I'm not going to do that, though. There we go. I got my fucking mouse back. ESZ now, right? That was basically the last chart. Thank you, Mark. That was the last chart of ESU we'll be taking a look at. All right. Okay. Now we're over to ESZ. We have swapped over to the December contract. Okay. No, I get that, Willow, but you post videos and selfies. People know who you are, and they know what you look like. That's different. You don't just hide and use a fake name and only have like 5 followers, and you know what I mean? So anyway, you're all right. I can't say that for the rest of the internet, but you're fine. Liquidity, right? These lows here, liquidity to opposing liquidity. Today, we did gap higher, and this is what I was trying to tell you guys earlier. Fine, we'll go to candlesticks. I can hear you whispering under your breath. Damn these fucking bars. Damn these bars, John. Please stop. All right, this gap here, right? You remember I told you over and over again that 50% can be a premium or a discount. Now, that really is more so relevant to ranges. But I have also told you that concepts can be cut in half as well. Every concept has a premium and discount, right? So we gapped higher. We're at all-time highs, I believe, especially for the ETFs and stuff. So we trade lower, and then we can't get back above 50%. Price cannot get back into a premium. It stays in a discount. Then we continue. Now we're below our opening range gap. This ends up becoming a mitigation, right? Because we have a gap, high, low, higher, high at all-time highs. that right there. Okay. Mitigation and low end of our gap. We trade lower. We retrace. We can't get past these up candles anywhere in here. Then we trade lower and we sink at 1040 for, like I said a minute ago, yesterday's PM low. This is, well, this is still the AM session, but lower low below an old low. So that to me sort of becomes a soup. And then we get our low risk buy. We get our first stage accumulation here. So that was the alert that you heard. You guys with me so far? No, the people who talk shit, they don't buy memberships. They're fucking poor. They're too poor to afford a fucking thing. Can't afford a $25 mentorship, and they sure as fuck will never own a Corvette. Because they're unsuccessful. So, sorry. I won't keep putting the pedal to the metal. I don't want to be rude. Fuck those people, man. Anyway, let me do my intro real quick, because I feel awkward not doing it. What's good? Z, Felix, Willow, Marshall, Capitalist, Naruto, Mason, Eric, Torty, Ellie, or Eli. I think it might be Ellie. Correct me if I'm wrong. What's good? Roger, Patch, welcome back. Adam, Harmon, AK, Flacco, Diesel. I do not know how to say that. Shava. I'm just gonna say AN. Or initials, right? AN, what's good? Mark, Joe. Is it Eli? That really doesn't help me out. That really does not help. Let's get Edmundo. Just ordered the daily stoic and trading in the zone. Good reads on the way. Let's go. Very good. Love that. Love to hear that. Right? We need to get some wisdom up in here, dog. We need to get some wisdom, some understanding up in here, dog. That's what we need. What's good, Young Flo? What's good, for JF, man? What up? And Gessner. Okay, cool. We got quite a few people on here now. Love to see it. Just finished trading in a zone and it was fire. Oh yeah, I've read Trading in a Zone like 3.5 times. By the end of this year, I'll probably read it again. I will probably read it again. What's good, Omar? Took along on YM today at 10:14. Can you give me your opinion on this setup? It was difficult for me to trust any longs on YM. Need to trim my fucking beard, chat. Maybe David was right. Maybe my beard's a little bit too long. Possibly. It is possible. $10.14 in here. Ugh. Yuck. This was like a big bear flag to go higher, I guess. I mean, I could probably see that, but this is trash. This is trash. You guys see what I'm saying though, right? You remember yesterday we went over the retail bull flag that can be faded to go lower, right? And this is the inverse of that, where you would have your pole here that David's mom dances on, and then you have your triangle here, right? So this is your big bear flag. So to fade that to go higher, yeah, I could see. You know, is my go-to fading retail patterns? No, that's not my go-to. I'm guessing you're probably up a little bit. depending on, I guess, where your entry was at and maybe where your if your stop was too tight, you probably got stopped out. Dow is dog shit. It's weak. It almost always is weak. You know, versus something like NQ as an example. I did point out some highs earlier. Obviously, we have traded lower. I didn't say to long, and I'll go over this a little bit as well. But when you're going to long the weakest index, that's difficult. I mean, I've done it. I did it yesterday, but it's not the smoothest, the easiest trading. You're making it more difficult for yourself. You know what I mean? Drop a like on the stream if just drop a like on the stream. You don't even need a reason. Just drop a like on the stream, guys. Appreciate that. But yeah, so I think it would have been better to either long NQ down in here or ES like I've already talked about. I think upside is fairly limited today. Like I have already mentioned, we're at all-time highs here, like during London. I did like this consolidation with those highs here, but one of the reasons that we want to mark consolidations is because those are not just targets, but remember, I might not have it. I might not have this ready. It's not phases of price like the T trades thing. It is the phases of a market maker model. You guys remember that? So when we look at something like this, right, original consolidation, you know, so on and so forth, all the stages. So a distribution or redistribution, that very may well be equal highs or low resistance highs. So although that you might think that might be a target initially, you still might be in a sell program. And if you long in a sell program, you are asking to get your ass kicked. You understand? Now, what would the terminus be on something like this? I don't know. Okay. I know a lot of things. I don't know everything, chat. There's some lows down in here. From like Monday's overnight here. Like new day, basically. So you have that. You see what I'm saying? That is kind of like hidden back there. It might be hard to see. But looking at it now, does that make more sense? Right? Take a look at this one more time. Consolidation, accumulation, reaccumulation. We may not have a higher time frame concept. We may have all-time highs. No worries. And then we have distribution, redistribution, and the continuation lower. Right? You see these phases here? That can be seen here. Original consolidation. It's really hard to say like accumulation and reaccumulation. We could say something like that. Accumulation, we traded back into it, out of it, inside of it, higher. And then you could say this right in here would be the manipulation. Very, very short term. Because there's nothing to reference on the left. Right? Manipulation, low risk, short. We trade lower. There's your mitigation. Right here as well. See that? So this becomes a giant market maker sell model. You guys with me? Drop some ones in the chat if you guys are with me so far. Robert Greene is good too. 48 Laws, Laws of Human Nature, and some others. But those are like the main two I've read. Do I keep glitching? Damn, that's fucked. Tevin says, you don't think it'll fill the regular trading hours gap? It can. It can. I mean, hell, the highs up here that I marked in electronic is above that anyway. So it would need to get past that to get up here. I still think that's possible for today. It wouldn't be all that shocking. But I will tell you, some people have a very hard time longing at all-time highs. I get it. I get it. That's understandable. But you have to understand, every trade you take, whether it's at the low end of the range, in the middle of the range, at the high end of the range, anywhere in the range, any trade ever, whatever size, whatever time, whatever price, any real trade is going to carry risk, period. What it boils down to is, what are you willing to risk? Do you like the low risk buys, you know, for a 1 to 5? Be my guest. Do you like maybe a little bit later, maybe, you know, within the range, still in a discount, and you like a 1 to 3 or something? Be my guest. Do you like the later trades, like the second stage accumulation? You can still frame low risk, high reward setups in the upper half of the range. You might like that too, you know? But it depends on, are you willing to take the trade? Are you willing to put risk on, yes or no? So for me today, I think maybe not down here. This I think was a little bit janky, but after this right there, once I said this earlier, before a lot of you hopped on here, you're always fucking late. It's cool. I'm just talking a lot of shit today. That right there, after we got our intermediate term low, after that, I think was solid, right? Because now coming up on 12 o'clock, coming up on the 12 o'clock macro, we can expect expansion, in which we've gotten. How high can this go? How far can this go? I don't know. What would make sense, no pun intended, is if NQ does happen to trade higher, if it wants to go past all of that and attack those highs, great. If ES goes with it, then it'll probably make a new high of day. But I don't know. I feel like that's asking for a lot. What I would do, I'm not in this, okay? I'm not in anything. If I was, I would probably partial on something like that. Well, we basically got partials already, but I would either TP or partial above 66.75. That is a short-term high in our gap here. If you were trying to be a finesser of sorts, I would probably aim for that 66.79. Still a premium. It's above that high. It's just a lack of wick up there. But, you know, I said this yesterday. Trading at all-time highs or near all-time highs for any asset, it can be tricky. You got to be careful. So, anyway, I got some notes for you guys. You want to go over some notes? Drop some twos in the chat if you want to go over some just general notes, general, you know, rules of thumb, if you will. Mastery was good too, but I only read, I think, maybe 2/3 of it, of that one. But it is nice though. You know, following a mentor and then eventually either finding a new one or that mentor retires or whatever, you know, keeping your options open and not just having one mentor, stuff like that. It's good stuff. It is good stuff. Okay, we'll do the general notes first. I was going to do the academic stuff, but I don't know. I've changed my mind. All right. General notes today, 9/16/2025. Number one, scratch my back real quick, dog. Number one, the goal is to be on side with the price delivery algorithm. All right. Number one, the goal is to be on side with the price delivery algorithm. Okay. A lot of people still believe in buyers and sellers, supply and demand, so on and so forth. I do not. Okay. I think all of that is bullshit. What I believe in is algorithmic price delivery. You get me? I believe that the market is coded to do certain things at certain times. The same stuff I keep showing you every week, right? And here is a prime example. 1250, or excuse me, the 12 o'clock macro, which is 1150, okay? 1150, we trade a little bit below the open of that macro, that particular minute, or even like a 10-minute candle, if you will. We traded higher, lower, right? As I said yesterday, the market does two things: trades to liquidity and inefficiency. So what do we see here? Inefficiency to liquidity. You see that? That to me is algorithmic. It has nothing to do with anything else. Nothing. Supply and demand, whatever. Support, resistance, dog shit, dog shit, dog shit. Okay? That to me is algorithmic. That's what I believe. There's plenty of YouTubers. You can go somewhere else. You don't have to watch me. You know what I'm saying? And I'm not trying to be mean or anything. I'm just trying to get you to understand what I believe. I could be wrong. There might not even be an algorithm out there. But you know what? Price does the same stuff all the time. You know what I'm saying? So this is what I believe. This is what I want to be on side with. If I think the algorithm is going to take price higher, then I want to look for expansion, right? I want to get in long on a retracement lower, okay? As I explained already, and the drawings are kind of off because we went down in time frame, but intermediate term low here, little stop run here, right? So we've already had yesterday's PM low taken. We've already had a lower low below that. And then we had another like short-term lows taken as well. So we've had all kinds of lows taken, high resistant lows, with triple highs up here and equal highs up here. So if we're heading into a macro, what's more likely? What is the likelihood of us trading lower versus trading to quadruple highs, which is hardly seen, by the way, quadruple highs and equal highs? We are, by definition, again, in my understanding, we are far more likely to go higher than we are to go lower. You understand? So that's number one. When I get to the charts, okay, first thing, where's the liquidity, right? Where are the lows? Where are the highs? You know, previous day high, stuff like that. And then I think, okay, whatever session it is, you know, in pre-market, equities, open, AM, lunch, PM, final hour, MOC, whatever, right? It's like, okay, where's the liquidity and what time is it? Are we likely to see expansion higher or expansion lower or possibly consolidation? We might see consolidation. Why would we see consolidation down in here? Why do you think? Before I tell you, why do you think? Right, I'll point it out to you right here. Why do you think right there is consolidation? Chat's open today, by the way. We can anticipate manipulation. We can anticipate expansion. We can anticipate retracements. We can anticipate consolidations. I'll show you again. Oh, that's the wrong image. Okay. Now, by the way, I'm not showing you a buy model. I'm showing you a sell model because I don't know where the other one is. But we can anticipate accumulation, consolidation. We can anticipate expansion to liquidity. We can anticipate a run on opposing liquidity. These are different phases of a market maker sell model in this example. It's different phases of a sell model or a buy model. Now, would this in here be a sell model? No. No. Hell, it may not be a buy model, but it is prices treating today like it is. So the answer, and again, this has always just been my opinion, but the answer is we got our low risk buy, right? Because we got our manipulation and then we saw expansion higher after a retracement. So we got our low risk buy already. So if this is the first stage, right, of accumulation, we can anticipate consolidation. On top of the fact, like some of you said, it is 11 to 12 for me. I view that as lunch. So we have a lunch hour and we have a potential first stage accumulation. So guess what? Are you going to get a wick entry and then price runs to your TP at the first leg of accumulation? No, that would not happen. Every once in a while, maybe, but that's 99 times out of 100. That's not how it's going to work. Lunch and first stage accumulation. You can expect consolidation. Now, after, right, once we leave it and once we're at the right time, then we can start anticipating expansion. Look at that. Down candle here, 1150 takes us higher. We still have those highs up here. And then a retracement into a down candle. And then we anticipate what? Expansion higher. You see how that works? Do you see why I had you go over to T-Trade's channel and watch that series that he did? Little mini 2-hour series on the phases of price. Are you guys getting it? I can't explain everything. I can't explain everything well either. There's some things that are hard to put into words. You get me? But what are the phases here? Expansion, retracement, expansion. I don't know if he considers manipulation like a phase by itself, but manipulation, right? Expansion lower met with expansion higher is a reversal. See what I'm saying? You see how this stuff all fits together? It all points to the same things. We're going to trade to liquidity, most likely. We can wait for manipulation, we can trade manipulation, or we can wait to trade right after that, or a little bit later before the move. As long as you're buying inside of a buy program, you're going to take a winning trade. Whether you got the next candle entry, whether you got in somewhere at the beginning of lunch, whether you got in during this retracement here, or right after, or a little bit later. You remember last year, and I think we did this a lot in 2023. We talked about how all of these price runs, right, have many opportunities within them. At least like 6, 7, 8 opportunities. Manipulation, next candle entry, and or low risk buy, right? Shifts in the state of delivery, inversions, mitigation, all that stuff. Every concept that you know of, you can always wait for the next candle to enter on. That opens up a whole new door to opportunities. You don't have to trade. Look, let me tell you this. I'm going off script here. I always do. I don't really have a script usually, but I just do whatever I feel like fucking doing. 1155. You don't have to buy that down candle. You do realize that, right? You don't have to buy that down candle. You can watch price go into it and you could say, okay, How do we respond? Oh, we closed off of it. Okay, well, that was the buy, but I'm not in. Okay, what's next? 12 o'clock. 12 o'clock trades down. Now we're in a new hour, right? Right here, 12 o'clock trades down. That could be a long as well. And not to be a show off or anything, but they keep saying there's no perfection in trading, but yet it trades right back into that down candle 2 more times. Perfectly. 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 What's that word? Perfectly. Perfect. They say it doesn't exist. What the fuck is that? What is that, chat? What is that if not trading exactly to that opening price? But there's no perfection. There's no algorithm. No. That flies in the face of anything, of everything that people learn or know, or they think they know about price action. You'll never get a perfect entry if you don't think they exist. Right. It's not about perfect entries, but I like showing off, and I get them sometimes. Exits sometimes too, but that's not what it's about. It's about, look, the shit is ran by an algorithm. Algorithmic signatures. Tell me it's not. What was Charlie Kirk's thing? Prove me wrong. Prove me wrong. Prove me wrong, big fellas. Prove me wrong. Okay? Buying a retracement during an expansion. Those are good trades. Need not enter down here. Now again, because I know some people are going to look at this and they're going to go, oh my God, this fucking guy and his bullshit. I'm not saying you can't trade down here. That's why we have an inversion model. I fucking taught that to you. Right? You can trade down here. You can have, right, those low risk trades. I'm not saying you can't do that. I'm not saying you can't add on, right, at any of these other retracements. All I'm saying is manipulation is an opportunity. An inversion is an opportunity. Not really a mitigation here, but whatever. Those equal lows taken, that's an opportunity. Right after, that's an opportunity. Anything inside of first accumulation is an opportunity. And then a little bit later before the move, that's also an opportunity. They're all opportunities. You may not like them. You may not like all 17 entry techniques in here. You might not. That's fine. I'm not going to force you to do anything you don't want to do. I'm not going to take your hand, put your hand on the fucking mouse and say, long it. Put the order in. You know what I mean? I'm not doing that. I'm telling you what's available to you everywhere. And like I've been saying the last couple streams, I know it's arrogant. I can trade all of it. All this shit. I know what it is. I know what comes first. I know what comes next. I know what comes last. I have a joke, but we're going to keep it moving. All right. Number one, let's get back to our notes here. Number one, the goal is to be on side with the price delivery algorithm. Buy programs, sell programs. Trade in the direction of liquidity or trade in the direction of opposing liquidity. Okay. Number two, and this is really more so for the individuals in the Discord who keep posting their, let's say, ideas like, oh, well, this was a run and then we got a fair value gap and an order block, but, you know, I took a loss. And again, just like I said, either yesterday or last week, or maybe both, the TikTok mentality, okay, is not it. These 30-second, 45-second strategies you learn scrolling through your phone while on the fucking toilet is not how you're going to be successful, dog. That's not how this works. You get me? You're riding in an Uber somewhere, going through your phone, and you think you're going to learn how to trade. That's not how this works. Okay? And I'm not trying to be mean. What I'm trying to tell you is that it's not that simple. It's not always that simple. You have to wait for specific criteria In order for the market to go lower, it needs to be primed to go lower. If it's going to go higher, it needs to be primed to go higher. Okay? So number 2 is the markets are not as simple as TikTok and social media make it seem to be. Now, I know you might think, well, John, hold on. You have a video and it says simple day trading strategy. Well, yeah, it is simple, but there was like 10 rules. Don't trade on Mondays and Fridays. Some of you probably still do trade Mondays and Fridays still. Right? And it's specific criteria. Take a specific low, right? And then get a shift. And then you can look for entries up to equal highs or whatever. Yeah, that's going to be good trading. But the whole simple 1, 2, 3 type shit, sweep this, down candle here, or fair value whatever here, it ain't that simple, dog. And you're learning that. The problem is, if you're trading with real money, you're getting burned with real money instead of just listening to sound logic. So I don't feel bad. No, it is crazy. I just saw your thing. T-Trades doesn't believe in macros. That's fine. He doesn't. And I can guarantee you he probably doesn't take those trades in here either. He probably doesn't get like really like low drawdown, you know, straight to profit type trades. Maybe he does. I don't know. But if he doesn't believe in macros, that's fine. You don't have to. But to sit there, I mean, I doubt he watches my content. Probably doesn't even know who I am. But to say they don't exist is retarded. And everyone's allowed to be retarded. Right? We're all entitled to our own opinions. That is true. But we're also entitled to be a dumbass. You know what I mean? Price seeking liquidity inside specific time windows. You can't tell me that's not true. You can't tell me that they don't exist. It does exist. I show you every fucking week. I show you every single week. And that's another thing too. You're right. They believe in time. I do too. They believe in all this, like, oh, well, time and price, but then you don't believe in macros. It's fucking weird. That's just weird to me. But like I said, we're all entitled to our own opinions, but you're also entitled to be a dumbass. You can say, you know, grass is purple and the sky is whatever, you know, tie-dye or some shit, or black. You could say the sky is black on a sunny day. Like, you can be wrong. Opinions are useless. What do you want me to do? Thank you, Mark. Anyway, where are we even at? Number 2, markets are not as simple as TikTok and social media make it seem to be. Number 3, okay, here's a big one. Number 3, not just low risk, high reward setups, also high probability setups. Okay? It's not just low risk, high reward. It's also high probability. Okay? You do realize, you know what? Matter of fact, I will give you another model. I can create plenty of more models. You do realize that? Well, I told you how to do it. You can double up the amount of models you have simply by utilizing the model that you have now, but instead of entering at a concept, just wait for the very next candle. So I'll give you a brand new model right now that I just fucking randomly made up. You can have, right, an intermediate term low, and as soon as that higher low is created and it gives us a long wick like that, you can take the very next candle. I don't even know what we'd call that. We'll just start naming off people from the Bible. We'll call that the Peter model. The Peter model, right? Intermediate term low. Soon as that bitch closes, next candle, long it. Stop at that low, aiming for liquidity. You're welcome. Just gave you a brand new model. That's not hard. Well, down candles that get respected, if I didn't long that, wait for the next candle. We could call that the Paul model. Peter and Paul. Peter here, Paul right there. Done. Look at that. Look at that. I just randomly made up 2 models right on the spot. Because as long as you're aligning with liquidity, dog, you're good. You're good. It's, why would that be high probability? Why would that be high probability? Why would that be high probability? Because they're all trading in the direction of opposing liquidity after a stop run. In an hour, we can expect consolidation here, but once we leave it, okay, now we can anticipate expansion. And getting in sync with expansion is high probability. You're going to take good trades, period. Thank you, Edmundo. I'm passionate, bro, because people are fucking stupid. You get me? Not you guys, but I'm saying in general, people don't know about trading. And even the ones that do may not know about the stuff here. And I give it pretty much all out for free. You know what I'm saying? Because I want people to learn. The problem is people look at this and they go, yeah, that is a perfect trade, but nah, I'm gonna just stick to my crossover. I'm gonna just stick to, you know, whatever, the things that I know. But then I'm going to take a loss and then get mad when John comes on YouTube and, you know, shows us his entries and exits and all this stuff. He keeps getting it right, but I keep getting it wrong. You're a dumbass. Like, I'm sorry, but respectfully, you're retarded. Do you know why I trade this way, dog? Do you know why I trade this way? Do you know why I know these things? And I teach them to you. Do you know why? Because I used to be stupid. I used to be the trader that would, you know, long the double bottoms, get stopped out, and the market go the other way. I used to be that guy that would try to, I don't even know. I would try to long in here, get stopped out, long in here, get stopped out, long in here, get stopped out, and then, you know, not trade the rest of the day and see the market go higher. I used to try to long bearish markets. Instead of having the patience and instead of taking the ego, eliminating it and going, okay, you know what? This might not be a long. This might be a short. Switch your bias. You know what I mean? I used to do stupid shit. I used to lose money very quickly. And believe me, if you do that enough times, at a certain point, you will realize, man, I'm doing the wrong stuff. I need to start doing the opposite. And that's why I'm on here for free, teaching you guys these very things. The mistakes I used to make, sometimes I still do. I'm not perfect. But I'm trying to get you to understand. The markets are not that easy. They're not that simple. There's specific criteria that needs to be met for high probability trades. Okay? So let me do this one more time, and then I'll go over number 4 and number 5, and then we'll be done for today. And it doesn't look like we're getting higher pricing. We made like a new high here about 30 minutes ago for NQ, and then we're just back in the range. And I can't tell if that really met or not. That little lack of wick right there. No shirt candle, basically. So the open of that is 6673.75. The high here is 6673.75. Oh, look at that. Perfection, right? Doesn't exist. Okay. Sure. Perfection doesn't exist, but yet price stops and turns on a dime right there at that lack of wick. Interesting. Number 1, the goal is to be on side with the price delivery algorithm. Number 2, the markets are not as simple as TikTok and social media make it seem to be. Number 3, not just low risk, high reward setups, also high probability setups. Number 4, I talked about this earlier. Align with expansion during a retracement at the right time. Did you catch that? I'll say that again. What was that, number 4? Align with expansion during a retracement at the right time. That is what was down in here. Down in here. You see that? Because, again, after the first stage or the first leg of accumulation, we can anticipate expansion. So once we have left, right, the consolidation here, and we've started, well, we've already started basically, but now we have a lot more evidence that expansion is here. We're still early on, though. You think it's late. You're fucking wrong. We are still early in the phase of expansion. So then 11:55, that's our 12 o'clock macro. And then, like I said a minute ago, 12 o'clock, that's a retracement. Okay. Let me highlight it for you. That right there. Okay. That is during expansion. It is a retracement at the right time. How hard is that? That's not hard at all. Unless you're David or any of these other goobers that hide behind their profile pictures. That's not hard. We anticipate expansion. We're longing a retracement at 12 o'clock. Time, price, and context. Time, what's the time? PM, basically, I view 12 o'clock. It's not just a new hour, but for me, that launches the PM session. Price, we're trading down into, not this concept, but on that 1 minute in here, right? So we've already had evidence that price is bullish. And on smaller time frame, same shit. Okay? So we're aligning with expansion during the right time at the right price. And what is the context that we're going to go higher to take liquidity? Because that's where price trades to. That and above it. Okay? Because we know that price trades to at least two things: liquidity and inefficiency. Liquidity and inefficiency. We don't have a lot of inefficiency in here. We get a lot of we got a lot of like back and forth in here for sure. But outside of the inefficiency, we do have liquidity, and that's where the market trades to. That is time, price, and context. If we go to a 1 hour in electronic, because regular, it's different. It counts it at because 8:30 is technically the open, so then 8:30 to 9:30 is the hour, and I think that's stupid. So look at this, right? 10 o'clock, it does its thing, manipulation. 11 o'clock, open, low, high, close. What's 12 o'clock? Open, low. Remember that drawing from right there? Open, low, expansion. And we want to be longing in that. So there you go. Number 4, align with expansion during a retracement at the right time. Number 5, patience. Okay. Stop rushing into trades. Stop rushing into trades. I know I've talked about this before. I say it all the time. Patience. Okay. Patience, patience, patience. That really should have been the watermark up here, huh? Instead of time, price, context. It should have just said patience 3 times. You know what I mean? Because that's what people need, bro. Everybody needs it. I need it too. It's okay. We're all human. How do you expect, okay? I didn't even mean to do that, by the way. That was just supposed to be there. How do you expect to long after a intermediate term low if the intermediate term low hasn't formed yet, dog? How do you expect to trade manipulation if the market's not below an old low? That's not manipulation. That might be a little bit. That's like 1 tick. That's not really like a full-fledged run below the low. That is, we actually see a few points below the old low and it rallies off of it. That's easily a higher probability manipulation than this. That is manipulation. This, not so much. You get me? But even if, what do you mean candlestick patterns though? Like what do you mean by that? Because it's not, I guess we can add this in here. Even though the markets repeat, okay, they're still gonna build liquidity, run a pose on liquidity, and then come back for the original buildup. They're still gonna have imbalances. Some of them will become inversions, some of them not. They're still gonna form gaps, right, and all these things. The concepts will repeat. And so by definition, that would be a pattern, yes. But we do not trade the pattern for the sake of it being a pattern. You can have all types of up candles, right? Doesn't mean every up candle is worth shorting. You can have all types of down candles. Doesn't mean every down candle is worth shorting. You get me? So that's what I'm trying to understand. Like the candlestick patterns, what do you mean by that? I get the concept, but I still don't like it. I don't know what to tell you. I don't like pistachio ice cream. Actually, I've never tried it, but I don't even want to. So guess what? I don't buy pistachio ice cream when I'm at the fucking store. I see it, I look at it, and I go, well, I know some people like that, but I don't. So I'm leaving it right there in the freezer. And I get the other ones. I get the Oreo ice cream sandwiches and shit. I like those. I don't like the other stuff. I don't know. I don't look at Bitcoin all that much. So you're on your own with that one. The new ones. Yeah, I don't know what you mean. What have you learned today, Ethernet, that was new to what I've already been doing? Serious question. Oh, the bars. No. You guys are gonna fucking learn to love the bars. You're gonna learn to love the bars. What's wrong with the bars? That's not a concept. It's the same thing. This and this are the same thing. There's no difference. Literally. There's no difference. Now, one might give... That's different. One might give you a headache a little bit. One might be like, oh, God, ugh, what am I looking at? And the other one might be like, okay, up close, down candle currently. You know what I'm saying? But when you're forced to look at a bar chart, that's what you're forced to look at. Open, low, high, close. Open, low, if we are going to see expansion, then this movement below the open is going to form the wick for higher expansion. Now, 1 o'clock, I don't know. Okay. I think it's possible that we could trade higher. I think it's possible. Now, would I be willing to long right now? No. Not at $50 a fucking point. No. Markets are a little bit weak today, right? Even though we had some small time frame expansion in here. On the day, though, we're still very closer to our low than we are like the high of here, of equities. So we're still in a discount. Does that make sense? So you're more than welcome to screenshot that on your chart, right? Screenshot how we're below the open, and then in 56 minutes, 57 minutes, see where the hour closes. Maybe it's higher, maybe it's lower. I don't know. But at the end of the day, I'll close it with this. At the end of the day, the point is align, right, with higher time frame expansion. You've seen the last few days on indices, okay? September the 8th, open, low, high, close. Tuesday, September 9th, open, low, high, close. Wednesday, open, low, expansion. We did come off the low, or we did come off the high, no problem. But there's still expansion within that. Thursday, open, barely trades lower, expansion, higher, or close rather, close higher. You see what I'm saying? All of these in here were solid expansion days. But look at our day candle right now. We went open, high, all-time highs, low, and we saw a little bit of longs in here. Sure. But this to me doesn't look like a super strong expansion day. So for that, we may not see it on the day. But that doesn't mean we can't have scalps in here. Doesn't mean we can't make money in here. But that's how you read it, Alberto. That's all this is. You do not have information that I don't have access to either. We're looking at the same shit. If you go to ESZ 2025 on a 1 hour time frame on a bar chart, you and I have the same chart. We have the same exact information. We're looking at the same contract at the same time, just like you and everybody else. And what you're at least learning on my channel is how to anticipate expansion and then get in alignment with that, along with everything else I've already taught. You get me? So when you learn high probability bias, you can take high probability trades, and when you put a little bit of risk, okay, not financial advice, but if you put a little bit of risk on and you hold for a good reward, what do you think is going to happen? What do you think is going to happen? You're going to take good trades. You're going to pass combine. You're going to pass an alpha futures. What's that shit called? The Apex one. And you're going to be able to keep doing that. And you're going to be able to take withdrawals. But no, Alberto, my point is that there's no difference between that and that. There's no difference. If you can anticipate higher time frame expansion, and higher time frame, it's relative. A 5 minute is higher than a 1 minute. That's higher time frame. Now, usually when we talk about higher time frame, it's like the daily and above. But a 1 hour is going to be a lot higher than a 1 minute. You get me? So I'm not going to spend a lot of time in here because we're at the end of the stream. But let me just give you a real quick example. 1 o'clock was right here. We opened lower, right? And we had no wick right there. We traded down. Where did we stop and turn on a dime? This little gap right there. That is buying below 66.69. Nice. 0.5, right? Below the hour, in the concept, we see expansion, okay? Now, 69.75 or 670 to 73, that might not be a lot to you. That's $150 a contract in 7 minutes. Fuck you mean that's not a lot? $150 in 7 minutes. Most people don't make that. Most people don't make $150 in 7 minutes. You might not think it's a lot. Most people don't make that. You see what I'm saying? It's a retracement at the right time with the anticipation of expansion. Okay? Now, I did say I'm not willing to long that. I'm not willing to. I do not take every single trade. I do not trade 100 times a day. I look for 1 or 2 good trades, and that's it. Okay? You see this 1 hour candlestick? This will be the last thing. I know. And just, we keep going and keep going. See that? The same thing we did. When we were below it, I said screenshot that. See where we close in another 50 minutes. We might be higher, we might be lower. I don't know. I can't predict every single candle. Okay? Not every single candle. A few, a couple, not every single one. Roger, frequently enough as I need to. So, anyway, with that being said, that's going to be a wrap. Okay, so hopefully you guys were able to learn something. Sell model here, it is hard to long after a sell model, okay? But at least now you understand, and even though ES may not have had the same sell model, like in terms of cleanliness, like this was just the PM session low, this wasn't really like a consolidation, this was still a sell model. So for those of you that were asking about like trying to long in here, you're trying to long in a sell model. You're trying to long in a sell program, and that will not work. That will not work. Doesn't matter how many buyers come in. Doesn't matter what you see on your volume or your level 2 or your level 3 or your level fucking whatever. Because price, the algorithm's going to take price and take it lower, regardless of what you see on any indicator, ever. You get me? That's what I'm telling you. I am telling you, these ideas, these algorithmic principles transcend all of it. All of it. I know that comes off a certain way, but like I said, this is an open door. If you want to be here, be here. If you don't want to be here, you want to go watch other streamers, be my guest. That's fine. If you see a lot of success with others, go for it. Don't come back. It's cool, bro. So with that, y'all be good, be blessed. We'll be here same time, same place on Wednesday the 17th. Now it is Tuesday, which means I will put out our market review later this evening. So probably in another 4, maybe 5 hours from now, and I will put out the market review for members only. So see y'all tomorrow.